Welcome to Lesson 6 of Week 9. Building on our discussion of distinguishing subawards from contracts, this lesson focuses on the monitoring responsibilities you bear when you make subawards. When you pass federal funds to a subrecipient, you become responsible for monitoring their use of those funds. This is not optional. Federal regulations specifically require pass-through entities to monitor subrecipient activities. Failure to fulfill monitoring responsibilities creates compliance problems for you regardless of whether your subrecipient complies. This lesson will help you understand the regulatory basis for monitoring requirements, specific monitoring activities you must perform, risk-based approaches to determining monitoring intensity, and documentation requirements for monitoring activities. The primary reference is 2 CFR 200.332. which details pass-through entity requirements for subawards. Review this regulation carefully and verify current text at ecfr.gov. By the end of this lesson, you will understand what monitoring activities are required and how to implement an effective monitoring program for your subawards. Understanding why monitoring matters motivates attention to this critical responsibility. Monitoring is not bureaucratic burden, it serves essential purposes. Your responsibility extends to subrecipient performance and compliance. When you make a subaward, you are not simply handing off funds and walking away. You remain accountable to your federal sponsor for how those funds are used. Subrecipient problems become your problems because you are the pass-through entity. Federal regulations specifically require monitoring. 2 CFR 200.332 states that pass-through entities must monitor the activities of the subrecipient as necessary to ensure that the subaward is used for authorized purposes. This is a regulatory mandate, not a suggestion. Risk protection through effective monitoring identifies problems early when they can be addressed. Discovering at project end that your subrecipient misused funds, failed to deliver promised activities, or violated federal requirements is too late. Ongoing monitoring catches issues when intervention is still possible. Auditors examine whether you fulfill monitoring duties. During single audits and other reviews, auditors specifically examine whether pass-through entities monitor their subrecipients appropriately. Monitoring failures create audit findings regardless of whether subrecipients actually had compliance problems. Risk assessment is a required foundation for your monitoring program. Understanding how to assess and respond to risk produces appropriate monitoring intensity. Risk evaluation at the time of subaward is explicitly required by federal regulations. Before or when making a subaward, you must assess the risk of noncompliance. This assessment informs how intensively you will monitor this particular subrecipient throughout the subaward period. Risk factors to consider include prior experience with the subrecipient, results of previous audits, whether the subrecipient has new personnel or new or substantially changed systems, and the complexity of the work being performed. A subrecipient with strong prior performance poses less risk than one you have never worked with. Clean audit history suggests better controls than findings in recent audits. Monitoring intensity should be proportional to assessed risk. Low-risk subrecipients with demonstrated track records may require less intensive monitoring. High-risk subrecipients with limited experience or concerning audit history need closer attention. Risk-based monitoring allocates your oversight resources appropriately. 2 CFR 200.332 paragraph B requires this risk evaluation and specifies factors to consider. Your risk assessment should be documented as part of your subaward files. Before monitoring can occur, subaward agreements must contain required elements. Proper subaward content establishes the foundation for effective monitoring. Federal award information must be included in the subaward. Subrecipients need to know the federal award identification number, award date, awarding agency, and catalog of federal domestic assistance number. This information identifies the federal source of funds and enables subrecipients to properly account for and report their federal expenditures. Compliance requirements applicable to the subaward must be identified. You must communicate what federal requirements apply to the subrecipient. Regulations like the Uniform Guidance, specific program requirements, and award terms that flow to the subaward should be referenced so the subrecipient knows their obligations. Indirect cost rate information must be included. If the subrecipient has a federally negotiated indirect cost rate, include it. If they do not, they may elect the 10% de minimis rate. The subaward should specify what rate applies and the basis for it. Reporting requirements should specify what reports you require and when. You need information from subrecipients to fulfill your own monitoring responsibilities. The subaward should clearly state what financial and programmatic reports the subrecipient must provide and the schedule for submission. Financial monitoring ensures subrecipient expenditures are appropriate and compliant. Several activities comprise effective financial monitoring. Invoice review examines subrecipient payment requests before making payment. Do requested amounts align with the subaward budget? Are cost categories reasonable? Do charges appear consistent with project activities? Careful invoice review identifies questionable charges before you pay them. Budget comparison looks at spending patterns relative to the approved subaward budget. Is the subrecipient spending in expected categories at expected rates? Are there unexplained variances that warrant inquiry? Significant deviations from budget may indicate problems or may simply require explanation and possible budget revision. Cost allowability verification confirms that charges are allowable under federal cost principles and award terms. Costs that would be unallowable if you charge them directly are also unallowable for your subrecipient. Ensure the types of costs charged are permitted under federal requirements. Documentation requests are appropriate when questions arise or for risk-based sampling. You may ask subrecipients to provide supporting documentation for charges such as receipts, timesheets, or contracts. This allows you to verify that reported expenditures are real and properly supported. Programmatic monitoring ensures subrecipients are achieving the objectives for which they received funds. Financial compliance without programmatic performance is not success. Progress review evaluates whether the subrecipient is meeting expected milestones and timelines. Are they on track with their work plan? Are activities occurring as planned? Understanding progress helps you identify subrecipients who may need support or who may not be fulfilling their commitments. Report analysis involves reviewing required programmatic reports for completeness and substance. Do reports describe meaningful activities and achievements? Do they demonstrate the subrecipient is doing the work? Superficial or incomplete reports may indicate problems with implementation or with reporting practices. Site visits provide direct observation of subrecipient activities when appropriate. For higher-risk subawards or those involving direct services, visiting the subrecipient's operation lets you verify that activities are occurring as reported. Site visits are not always necessary but can be valuable monitoring tools. Problem identification means watching for indicators of implementation challenges, missed deadlines, incomplete reports, staff turnover, communication difficulties. These signals may indicate subrecipients who need assistance or intervention. Early identification allows early response. Audit verification is a specific monitoring requirement that applies when subrecipients are subject to single audit. Understanding this responsibility ensures you fulfill it. The audit requirement applies to subrecipients expending $750,000 or more in federal awards during their fiscal year. This threshold applies to their total federal expenditures, not just your subaward. However, your subaward contributes to their total and may push them over the threshold. Your verification duty requires confirming that subrecipients subject to audit requirements complete their audits. You can check the Federal Audit Clearinghouse to verify whether required audits have been submitted. Failure to obtain required audits is a compliance problem for both the subrecipient and you as pass-through entity. Reviewing findings means examining any audit findings that affect your subaward. If the subrecipient's audit identified findings related to the federal program you pass through, you need to know about them. Findings may indicate compliance problems that affect your subaward. Follow-up ensures the subrecipient addresses relevant findings. If audit findings affect your subaward, work with the subrecipient to ensure corrective action. Your monitoring responsibilities include ensuring findings are resolved, not just noting that they exist. Documentation of monitoring activities demonstrates that you fulfilled your responsibilities. Good documentation protects you during audits and reviews. Written records should document all monitoring activities performed. Note when you reviewed invoices, what you examined, and what you concluded. Record when you reviewed programmatic reports and any concerns identified. Document site visits, phone calls, and other monitoring activities. Correspondence files maintain records of communications with subrecipients. Save emails, letters, and notes from phone conversations related to monitoring. If you asked a subrecipient to explain a budget variance or address a concern, maintain records of that exchange. Issue tracking documents problems identified and how they were resolved. When monitoring reveals concerns, record what you found, what you communicated to the subrecipient, what actions were taken, and whether the issue was resolved. This documentation demonstrates responsive monitoring. Retention of monitoring records should follow federal requirements, typically at least 3 years after submission of final reports. Maintain organized files that can be accessed if auditors or others need to review your monitoring activities. Electronic records should be backed up and accessible. When monitoring identifies problems, you must respond appropriately. Effective problem response is part of effective monitoring. Early intervention addresses issues as soon as they are identified. Do not wait to see if problems resolve themselves or defer action until convenient. The longer problems persist, the more difficult they become to address. Prompt response when issues emerge produces better outcomes. Technical assistance may be appropriate when subrecipients need support rather than sanction. Organizations new to federal grants may not understand requirements. Staff turnover may leave gaps in compliance knowledge. Providing training, guidance, or other assistance may resolve problems more effectively than punitive measures. Corrective action requires remediation of actual compliance problems. If a subrecipient charged unallowable costs, those costs must be removed. If procedures are inadequate, they must be improved. Corrective action plans should specify what will be done and by when. Enforcement options exist when problems are serious or subrecipients fail to take corrective action. You can withhold payment pending resolution of issues. For severe or persistent problems, suspending or terminating the subaward may be necessary. These are serious steps but must remain available as last resort. Monitoring frequency should match subrecipient risk and subaward characteristics. Understanding appropriate frequency helps you allocate monitoring effort effectively. Risk-based approach means higher risk subawards should be monitored more frequently and intensively. A subrecipient with prior problems, limited experience, or complex activities warrants more attention than an established partner with demonstrated compliance history. Your risk assessment informs monitoring intensity. Invoice cycle financial monitoring should occur at least with each payment request. Before paying an invoice, review it for appropriateness. This ensures problems are identified before payment rather than discovered later. The payment cycle creates a natural minimum monitoring frequency. Progress reviews align programmatic monitoring with reporting periods. If you require quarterly reports, review those reports quarterly. If milestones are due at specific points, verify achievement at those times. Reporting schedules create structure for systematic programmatic monitoring. Continuous awareness maintains ongoing attention to subrecipient status even between formal monitoring activities. If you hear about problems at a subrecipient organization, do not wait for the next scheduled review to inquire. Stay generally aware of subrecipient status and be ready to engage when circumstances warrant. Site visits provide direct observation that cannot be achieved through desk review. Understanding when and how to conduct site visits strengthens your monitoring program. Site visits are appropriate for higher risk subawards, programs involving direct services to participants, subawards involving large amounts, and situations where desk review has raised questions. Not every subaward requires a site visit, but the option should be available for circumstances that warrant it. Planning ensures productive site visits. Schedule the visit in advance with your subrecipient. Develop a clear agenda covering what you want to review and discuss. Provide the subrecipient reasonable notice so they can prepare, while maintaining your ability to observe normal operations. Activities during site visits may include interviewing key staff about their roles in the project, reviewing financial and programmatic records, observing program activities or operations, and examining documentation for a sample of transactions. Use the site visit to see things you cannot assess from a distance. Follow up after site visits by documenting your findings and observations. Communicate any concerns to the subrecipient in writing. If issues require corrective action, specify what is needed and the timeline for completion. Site visits are only valuable if you act on what you learn. Common monitoring failures create compliance problems that attention can prevent. Recognizing these mistakes helps you avoid them. No documentation means performing monitoring activities but failing to document them. If you reviewed an invoice before paying it but kept no record of your review, you cannot demonstrate that monitoring occurred. From an auditor's perspective, undocumented monitoring is the same as no monitoring. Ignoring signs means not following up on indicators of problems. If a subrecipient's reports seem superficial, if invoices show unusual patterns, if you hear about organizational difficulties, these signals warrant inquiry. Ignoring warning signs that later prove significant reflects poorly on your monitoring. Automatic payments process invoices without meaningful review. If the accounts payable process pays subrecipient invoices with no one actually examining them for appropriateness, financial monitoring is not occurring. Invoice payment should involve actual review, not just processing. Infrequent review allows long gaps between monitoring activities. If you check in with the subrecipient once a year regardless of risk or subaward size, problems have time to develop and compound before you notice them. Regular risk-appropriate monitoring catches issues earlier. Most institutions provide infrastructure to support subaward monitoring. Understanding available resources helps you fulfill responsibilities effectively. Centralized support from sponsored programs offices may include tools, guidance, and assistance for monitoring subawards. These offices have expertise in federal requirements and can help you understand your obligations and how to meet them. Take advantage of institutional expertise. Standard procedures may establish institutional approaches to subaward monitoring. Your organization may have policies specifying minimum monitoring requirements, documentation expectations, and escalation procedures for problems. Follow institutional procedures to ensure consistent, compliant monitoring. Templates and checklists provide pre-developed tools for monitoring activities. Risk assessment templates, monitoring checklists, and documentation forms help ensure you address required elements systematically. Using institutional tools produces more consistent documentation and reduces the chance of overlooking important items. Training resources educate staff about monitoring responsibilities. If you have not received training on subaward monitoring, ask whether your institution offers it. Understanding requirements is the foundation for effective monitoring. Seek out educational opportunities to strengthen your knowledge. Following best practices produces effective monitoring that protects you and supports your subrecipients. These practices should guide your approach to all subawards. Start with risk assessment by evaluating subrecipient risk before determining your monitoring approach. Higher risk subawards need more intensive monitoring. Risk assessment documents the basis for your monitoring intensity decisions and demonstrates thoughtful, compliant practice. Document everything by creating contemporaneous records of all monitoring activities: what you reviewed, when you reviewed it, what you found, what actions you took. Documentation demonstrates compliance and provides institutional memory. If questions arise later, your records tell the story. Follow up promptly when monitoring identifies concerns. Do not note issues and then take no action. Communicate with subrecipients about problems, work toward resolution, and document the process. Timely follow-up prevents problems from compounding. Maintain relationships because monitoring works best as collaborative partnership rather than adversarial oversight. Approach monitoring as helping subrecipients succeed, not catching them failing. Good relationships facilitate communication and problem-solving when issues arise. Let us summarize the key points from this lesson on subrecipient monitoring. Monitoring is federally required, not optional. You must document your monitoring activities and address problems promptly when identified. Failure to fulfill monitoring responsibilities creates compliance problems for you, regardless of whether your subrecipient actually violated any requirements. Risk-based approaches align monitoring intensity with assessed risk. Evaluate subrecipient risk at the time of subaward and adjust your monitoring accordingly. Higher risk subawards warrant more intensive oversight. Lower risk subawards with demonstrated track records may require less intensive monitoring. Multiple components comprise a complete monitoring program. Financial monitoring ensures appropriate expenditure of funds. Programmatic monitoring verifies that work is being accomplished. Audit-related monitoring confirms that required audits occur and that findings are addressed. All three components are necessary for effective oversight. In our next lesson, we examine program income, the revenue generated from grant-funded activities. Federal regulations govern how program income must be handled, and proper management prevents compliance problems. Understanding program income requirements helps you plan for and manage these funds appropriately. Practice exercise. Review a subaward you currently manage or plan to make. What is your risk assessment? What specific monitoring activities will you perform? How will you document your monitoring? Develop a monitoring plan for this subaward.